Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. The May corn contract was under pressure most of last week until it found support near 354 on Friday, where it had a pretty big rally. Since then, the market has been up to sideways ahead of the WASDE report. We have upward resistance at the 366 number, and downside support continues to remain at 354. For now, the market will probably be a bit congested ahead of the WASDE report, and so we'll continue to keep an eye on where the market looks to trade. You'll notice here about March 4th, the market came into our cycle turn date. Plus or minus a couple days around that level is when we anticipate the market can make a pivot, which is exactly what we can see here on the charts. And so the upcoming few days, we'll be able to see how the market really responds to our cycle time, as well as the WASDE report. Interestingly enough, the low that was made last week coincided with 2 standard deviations below the point of control, which sits at 355 and 3/4, or about 356. Just above that, we have 373 and 3/4 as the next key level, and the point of control currently sits at 395 half. These three areas or levels in the market are going to be very important to watch with regards to how it's able to trade up through these numbers once it reaches them. At 395 half, that will be a very important level for the market, or barrier for it to go through. If it's not able to get through this area here, we would anticipate the market to come back in and find continued pressure back down. Moving forward onto the December corn contract, in a similar fashion, the market found great support here at volatility-based support. The market touched this area and then bounced off of there in quite a dramatic fashion. We're now consolidating and really moving sideways since that time, and we have support right here at the 373 half number and upside resistance at 385 and 3/4. The way in which the market operates in between the zones is going to be very important, and you can see the market really flattening out here with regards to momentum or being overbought or oversold. And so we want to see some energy come back into the market before we can get some clear indication as to where it wants to go. For now, our cycles continue to tell us that the market should be slightly up to sideways over the next few weeks, at which point we should see the market returning back down given the current narrative of supply and demand. We really like how the market found support here at our natural grid level at the low end of the market, making a low near 373, at which point it has bounced up from here. We also like how the market had great resistance at our prior resistance point, but the key levels that we want to have on our radar right now, in particular, is our point of control, which is at 390 and 1/4, and 2 standard deviations below that point of control sits at 315 even. And so it is no surprise that the market found great support at this number as it came in. After having made a low, the market, like the other contract, has since been up to sideways, and this is the price pattern that we'll continue to anticipate for the coming weeks. The May soybean contract gives us a lot to really consider here. In particular, we came into a number of confluence with regards to our indicators here. The first thing you'll see is the market came into our N band, and once the market tags these levels, it likes to reverse a direction and move opposite from whatever trending direction we've seen it in. In addition to coming into that level, we also see that we had volatility-based support come in at that price area. Once the market moved up from this trajectory, we came into our forecasted timeline cycle of March 4th, and you saw the market really get energized and take a really big advance. It continues to find strength in its movement here. Now we're looking ahead, and we believe that we'll see upward resistance come in about 900 to 905 for this contract. And so as the market has been moving up, those who perhaps have gone long early in this move are doing fairly well, and this is a good time to look at either tightening stops or looking to perhaps cover, looking at how the market has moved with this recent short squeeze that's perhaps been the main culprit from this for this advance. The May contract has been trading inside of a fairly tight range over the past several months. It is poised now to actually break out of that trading range to the upside, but that upside is perhaps going to be muted by one standard deviation away from that point of control. Testing the 882 number has been very key for it. We're currently slightly above that number at 885 3/4, but if we're able to actually muster some strength beyond that, then 900 to 905 is going to be the next key objective. Now, if it's able to actually blow through 905 with some good strength, then the next real area that we'd be looking for is for the market to really come up to previous major highs at about 920 or so. This pattern that we're seeing right now, if the market can continue up as we are in advance of that WASI report, if for some reason we're able to get any form of bullish indication or if there's some kind of weather event, the market could very well make a very nice advance up to that 920 number. The July beans contract is showing us the exact same pattern. We're currently sitting at resistance, which is 270 degrees, which sits at about 890 or 895. And so the market has found really good resistance at this threshold here. And in addition to that, we have some good resistance coming in at about 900 to 905, similar to the May contract. If this market's able to blow through here, then we'd be looking at the next levels, about 925 to 930 or so, as the next key resistance for him to get to. And what you'll also notice with regards to this continuation pattern here, if the market's able to have a nice breakout, the distance traveled on the way in is what you'll typically see on the other side before it fails, which would put us right at that 925 number. July wheat hit our minimum price objective of about 450, and after doing so, it rallied in a very strong fashion straight out of that area or that movement. Currently, it's sitting at about 472, which is near very good resistance. We believe that the next key point for him is going to be about 480 on its way up, at which point the market will probably become in a very nice overbought position, really setting us up for a nice decline back down to test the lows. So we'll see the nature of the strength in which we see the move here. The supply-demand narrative really has not changed, and so the market continues to be bearish, but it was due for a technical bounce, and with some profit taking from the recent decline is probably the real cause for the advance that we've seen the past few days. Above 480, the next key area of resistance sits at 487, and we don't believe the market will have enough strength to get much higher than the 487 to 490 mark before turning back down again. Additional confluence with regards to resistance overhead, we can see one standard deviation below the point of control is 486, and our point of control currently sits at 418 1/4. And so 486, 487 really is going to be a very challenging area for this market, given the nature of the number of indicators pointing to that same level for great resistance. To close, we'll have a look at the April crude oil contract. We really like the current movement that we're seeing here, moving very true to our expectations. We talked about the market making a very significant low, looking for an advance that should test our near-term resistance band. The first time it came through it, the next day the market came right back down, and now it's moving back up again. If this market's able to hold above this key resistance band, we really believe that 43.60 is going to be a very key objective. You'll also notice that we have our natural trend line coming down, which is what's been key resistance as well for this market here. Once it's able to get through this threshold, price of 43.60 as a target is very likely. and so we'll continue to monitor how he moves through this area here. The last thing we want to bring to your attention is we told you early on that we had a potential cycle timeline of March 11th. The market continues to move up very nicely up into this potential turn period, and in the past, our forecaster timelines have done well with regards to giving us either a short-term or long-term change in trend in these markets. So if somehow this contract is able to move up into this threshold, perhaps meeting up against our natural trend line for a move back down, as long as that retracement or that pullback does not exceed 50% of the advance, we perhaps are looking at the next move back up into April 8th. That could very well be the point at which we make our test of that 4360 number if the market doesn't just blow through and make this advance from where it is right now. But in all likelihood, our disposition tells us that we're probably looking at a near-term top near March 11th for a pullback that comes in between and then turns back up, or a pullback that comes in down into April 8th and then turns back up again. So we'll continue to monitor this guy, but we really like the way in which it's been moving given our support and resistance thresholds that we've outlined for you. Thank you so much for joining us for our weekly market update, and look forward to touching base again with you next week.